Welcome back to Indianomics Women's Day Special. I'm speaking with 4 top bankers, all from Standard Chartered Bank, Mumbai. I'm speaking with Zarin Daruwala, Parul, Mittal, Sinha, Ankur and Anubhuti, all of them in the top levels in Standard Chartered Bank. Okay, we left off when we spoke about the capex cycle, but when do you see credit offtake picking? More importantly, do you see this, the budget, rate cuts, all this taking credit growth to what, the previous near 20% levels?
So I think the budget certainly has given a big consumption boost. Our expectation is the RBI rate cuts plus the budget benefit that they've given in the tax, both put together should be about 0.45% of the GDP. Okay. So it's a meaningful thing. So hopefully we will see the consumption cycle play out after a few quarters. And once we see consumption play out, then we also see private sector sort of, coming forward to invest, because then capacity utilization for private sector will go up. So I think it's going to be a few quarters before we see and then, as I mentioned, private sector will first use up their free cash to do the capex before they come to the banks for credit. Okay. So in the next 6-9 months, bank credit growth will not be very high. Yeah.
Okay, may not be high right away. Okay, actually, you and I have seen it. These are younger girls, but you and I have seen the previous cycle, Rakesh Mohan saying lazy banking, when actually people were using their internal funds, but capex was happening. You may be right. But Anubhuti, what is your sense in terms of how many rate cuts more?
So we are definitely going to get a 25 basis point of rate cut in the April meeting. That's the bare minimum. Can we get more is a big question. And I think here the broader dollar rate trajectory will be extremely important.
What about inflation? What's your inflation forecast?
Inflation, in our view, looks pretty well contained. For next year, our forecast is at 4.5%. Probably the next print which we'll get will be closer to 4%. At this point in time, our sense is inflation risks are well managed. We are not worried about imported inflation risk at this point in time because global commodity prices are low. The only risk which I'll probably monitor is any weather disruptions. Okay. Like the previous years, probably we are more focused on food inflation rather than core inflation upside risks.
We do hope after 3 years of high food inflation, we are lucky this year. But Parul, what does that do to bond yields? We have seen the liquidity itself take away about 5 basis points from bond yields. By, say, June, when the rate cuts are probably done, where can the 10-year go?
So bonds have been reacting very slowly to all the measures, the rate cut, the liquidity injection, the OMO purchases that RBI has been conducting. We think it's more of a year-end phenomenon where banks are taking the opportunity to book profits. I think over the next 3 months, especially on the back of this further liquidity injection, we can see bond yields head towards 6.5 kind of levels. Okay. And the demand-supply dynamics, which are right now biased towards banks selling their stock, will move towards bank coming into the market again and buying bonds.
Ankur is saying that the FPI debt flows can resume because of the MIFORs falling. So you expect...
Yes. So in fact, if you see over the last quarter...
So will not that push yields down even further? Or 6.5 is about...
FPI inflows in debt market have continued. They have been the ones really offsetting the equity outflows, even in the last quarter. We think that continues further because of this push to take forward yields down. That will happen, but I think the largest impact comes from domestic banks. They are the bigger influence in the local markets. Yes. Unless they buy, the influence of FPI flows is very small compared to their influence. Okay,
so there must be a mood of dovishness among treasury heads, like yourself.
But I'm also hoping, Latha, that the stagnation on yields or the rally on yields will also propel the corporate bond market. Yes. And you will see FPIs coming in, participating in that, right? Because they get that additional pickup over the GSEC. And for the corporates also, it makes sense to do like 5-year, 10-year bonds. We had started seeing some signs of it last year, but as MIFORs got back up, that trend reversed.
Okay. So that's very important. I mean, considering that now we have many bond buyers. I mean, insurance and pension and FPIs are all new buyers, and now Reserve Bank is a big buyer. So if the government bond market is so well serviced, maybe corporate bonds will get a look in. But one point which perhaps will go into the sunset, you think, climate bonds or sustainable finance, does it go completely out of fashion, or should we still keep some hope?
You know, Latha, the rhetoric might change, but the reality won't, in my view, right? I think the climate crisis is for real, and it's only escalating.
Yes.
And if you look at our government, their focus and their vision of getting to a net zero from a 2070 perspective, nothing has changed. From our business point of view, we see this as a huge competitive advantage. We can raise capital overseas and then deploy in markets like India, which needs this climate or capital sustainable finance. In the last 3 or 4 years itself, we would have funded almost 10 gigawatt of renewable projects. And there is 250 gigawatt more to be done in the next 5 years. Even if you take a small portion of that, that is all sustainable finance. If you look at the electric vehicle industry, we are only at 8% penetration. If the government's target of 30%, and I don't think the government is changing it, I think also the consumer demand is shifting in favor of that. That requires $40 billion of capital. That's all sustainable finance.
No, I take your point. India needs, I mean, tropical countries, for us, it's not a homily. It's not something noble. It's something necessary. So I take your point that EV and renewables are going to keep sustainable finance alive. Zarin, again, I want to say that you are a hero of many cycles. The previous cycle, you saw that big NPAs from big corporates. How are you looking at a cycle now? Is this unsecured loan and MFI a passing irritation, or would you worry for the banking system?
So, Latha, if we see our own bank, actually we've seen we call it 0 plus or 30 plus kind of in banking jargon.
Days past due.
Yeah, that has come off.
Okay.
So, we are seeing that reversal of the trend. Already. In Jan and Feb, we've already seen that. So, I'm assuming that the worst is behind us. And also, I think the risk-weighted asset reduction that has been announced for NBFCs and the MFIs, I think that also will sort of enable a little bit of more flow of credit, which enables people to sort of,
pay back.
Yeah. So
fair point.
Yeah.
Zarin, you will be signing off as in this innings. I'm sure we're going to see you in another innings. What's your message to the banking sector? Do you see it going from strength to strength? What are you leaving with? Give us a message for the banking sector.
I think banking sector typically grows as a multiple of GDP, and given where India's GDP trajectory is going to be for the next 10 years, I think I see a very, very robust future for the banking sector. Also, the NCLT and the bankruptcy laws, etc., have had a huge behavioral change in how sort of corporates are leveraging. So, given all those things, I see that even if we see some cycles, it will be much more muted than what we saw in the last decade.
That's very good to hear, especially coming from a person who has seen 2 or 3 decades of Indian banking. Just a last word to women viewers, either in terms of an inspiration or an anecdote, what would you want to share? It is International Women's Day.
So I think I can only share from my personal experience, and I just want to quote 1 or 2 things. I feel 2, 3 things that I have lived by. One is I've lived by unlearning and relearning. So I joined in an era where there was no ATM, no debit card, no credit card, nothing, right? And today we are, I have to
pass that to GPay.
No, and as a CEO, you have to be involved in the whole technology, piece, right? So it's very important as you go up to be humble enough to admit that you don't understand it and ask somebody who understands it better that explain me. So that's something that I've lived by. And the second thing is I live by one more mantra, which is persistence. Okay. So I have a quote which I would like to end with, that the river actually, the river cuts through the rock, not through its power, but by its persistence.
Okay.
So,
That's why women have come to the top. I mean, generations have worked. My mother and her generation worked, and we are able to be here. Thank you very much for that very inspiring thing, that be at it and you succeed, and of course, be humble. Thank you very much, Anubhuti, Ankur, Parul, and Zarin, for joining me in celebrating International Women's Day, as we should, as finance experts, and not just because of our gender.